call, and I'm going to be your MC for the day. So before we start, I'd like to quickly take you through our disclaimer. We're not going to read through the whole thing, but just please note that while obviously due care has been put behind this material, it is in summary form, so the information isn't to be used as advice. Some of the forward-looking information may change due to extenuating circumstances, so readers are cautioned not to place any undue reliance on it. As for today's presenters and agenda, so in terms of the agenda, we'll quickly take you through introduction, some financial highlights, our integration update, and then we'll go through a Q&A together. And now I'll hand over the floor to Martin.
Thank you very much, Reem, and good morning, everybody. Great to have everybody here with us today, which allows us to give you an update on what happened in 2023. Before handing over to our Group CFO, Ravi, let me just highlight a few points, because 2023 has definitely been a foundational year for Liva Group, because it was the new beginning following the successful combination of National Life Group and RSA Middle East. And these two companies have been, on one side, complementary, but also diverse in its play. Through the integration, we built a very, very strong business across multiple territories and makes us one of the top 10 players across the GCC region, which is really something which we strategically wanted to build and are very proud that towards the end of 2023, we are almost there. We will also share with you an update on the integration as part of this presentation. The extended geographical footprint also allowed us to offer more products into various new segments and different segments. And this diversification also came to play for the 2023 results. Again, Ravi will share with us a bit more how we managed to start to play the diversification. But for us, this is really the foundation for 2024 to 26, our strategic horizon we are planning from. So when looking at it, and you can see it also here on the slide, we just picked a few other key highlights out to bring out much more the strength of the group. Obviously, AM Best rating as well, which has been reaffirmed, which is excellent, which is just a testimony of where we are, who we are, and especially where we are moving from solid financial strength, pan-GCC presence, and the diversification. I will share towards the end of the presentation a bit more where strategically for 24 and beyond we are going to focus. But we are seeing 23 has been a challenging year in some elements for us. As I said, a building year where we brought together these two operations. But we are also very proud of Liva now being in front of you as one of the top players pan-GCC with presence in the key markets and really with an ambition to take this as a starting point on the journey going forward. But I know you're very much interested in financials, so that's where I hand over to Ravi, our Group CFO, who will run through a few KPIs and information. And of course, as always, at the end of the presentation, we're very happy to take any of your questions. Please, Ravi, over to you.
Thank you, Martin. Good morning, everyone. Salam alaikum. In terms of the overall financial results for the group for the year ended 31st December 2023, the group ended the year with a profit after tax of 6.4 million compared to 3.1 million that was declared last year in the comparative period, representing a significant increase of 107% in terms of the overall profitability. This profit was primarily contributed by a much higher interest income that we have reported in the current year compared to the corresponding year in 2023. Overall investment income contribution to the profit stands at 13 million Omani riyals compared to the 7 million in the corresponding period. And this investment income was primarily achieved as a result of the optimization of the overall investment portfolio for the group, which included the erstwhile RSA Middle East investment portfolio, and also supported by favorable market conditions, especially the higher interest rate. In addition to the investment income, from a purely insurance operations perspective, insurance service result as of 31st December 2023 for the group stands at 9 million Omani riyals compared to 5 million Omani riyals that was sort of restated as a result of implementation of IFRS 17, and therefore the comparative information is comparable, as both the numbers reflect the results as a result of implementing IFRS 17. Again, insurance service results significantly higher compared to the last year, representing a 65% increase, which again was as a result of a very healthy top line growth of 43% that the group has witnessed for the year ended 31st December 2023. The overall insurance revenue of the group stands at 311 million compared to 217 million that was reported in the corresponding period of 2022. Key point to note here is that the RSA Middle East acquisition was done in the second half of 2023, as a result of which the results for the period 2022 represent 6 months of financial performance of RSA Middle East compared to the full year performance that has been included in the current year. I can move to so primarily the current year results, as Martin earlier mentioned, has been delivered in addition to all the integration activities that have been carried out by the group, and despite some challenging sort of market conditions with respect to certain portfolios of the group. However, the diversified geographical diversification that has been achieved as a result of RSA Middle East acquisition has contributed positively to the overall financial results, where the Saudi operations of the group, which again was very minimal in the comparative period of 2022, represents 17% of the overall portfolio, and Saudi continues to be an exciting market for the group, where there are significant market opportunities, and we intend to sort of focus on leveraging those market opportunities. In addition to the higher contribution of KSA, UAE continues to be a very strong part of the overall portfolio, in addition to Oman, where the group continues to remain the largest insurance player. As a result of the overall top line, now, as Martin earlier mentioned as well, the group is one of the top 10 largest insurance player in the region. As I said, the focus from as a result of this diversified portfolio continues to be to explore the significant market opportunities that are currently available in the UAE and KSA market. Can this move? In addition to the geographical diversification that has been achieved by the group as a result of the RSA Middle East acquisition, even from a product portfolio perspective, now the overall portfolio is much more balanced, where the reliance on the life and medical portfolio, which used to contribute close to 64% of the overall insurance business that was carried in 2022, now represents 51%, where other product lines have started contributing much higher to the overall insurance revenue. Again, the results have been delivered as a result of the geographical diversification as well as the product diversification that has been achieved by the group as a result of the RSA Middle East acquisition. The motor remains one of our core product in addition to the life and medical, and the growth potential on the non-motor drivers, in addition to the KSA and the UAE opportunities that I talked about earlier, remains our key focus to continue to grow and deliver a much healthier top line going forward. So with that, I will conclude the financial highlights, and I'll hand it over to Dr. Dhafir to just update on the integration. Thank you.
Thank you, Ravi, and thank you, Martin. Welcome again to this year's review. Overall, 2023 was an integration year. During the year, we had more than 112 stakeholders across 6 markets with more than 34 regulators, and we have successfully implemented our integration plan with more than 24 systems reviewed, 1,300 contracts reviewed, 50+ new policies introduced to the group. It was a very busy year, on top of obviously working on many great initiatives. The process went smoothly and seamless due to the dedication and hard work of our quality and the quality of our teams. Overall, Oman integration was completed in October, We have transferred the portfolio from previously National Life to what formerly was Al Ahliya, today rebranded to Liva Insurance Oman, and the group Liva Group, which is listed obviously in MSX under the new group name. We have also consolidated in Oman many branches from 43 to 24 to 27. Staff mobilization moved to the headquarters, and among many initiatives that came out of the integration process. In Saudi Arabia and Bahrain, we had by end of November completed the rebranding, the renaming, introducing the new policies based on as an outcome of our integration plan. Kuwait is on the way, and the UAE is yet to be completed. In the UAE, we have started phase 1. We have completed the rebranding of RSA Middle East, and obviously we have just received the initial approval of moving the portfolio of our health books from the National Life branch to RSA, to the former RSA, to become Liva Insurance UAE, and hopefully this will all be completed and we'll have a full closure of integration by end of Q2 this year. Obviously, while all of this was happening, customers were our focus, making sure that communication is very clear and ensuring that we are retaining and continuously engaging our key clients. We are very proud of our colleagues who worked night and day to complete this massive exercise and will ensure a successful closure by Q2. We are focusing more, obviously, on many of the initiatives this year and see the fruits of the integration project over the coming years. Some of the benefits that I can share with you today, maybe the next slide, Reem. There have been many benefits. We're still yet to realize more as we grow as a group, as we synergize more. But across, obviously, one of the key theses behind this acquisition is to have, and it's embedded in our new vision and value and purpose, is to be present across the GCC with a comprehensive multi-line menu of products that are continuously growing. The cross-sell opportunities, regional presence gives us a key advantage. Overall, the integration project was done mainly in-house, and it was managed very well in terms of cost, benchmarking it against many other acquisitions across the region in similar sectors. The complexity of this deal with more than 30 regulators, as mentioned earlier, we managed to complete this within a year, where others have gone to 2 years, and we've also managed to maintain it within 2.5% of the transaction value, which is also a very ideal benchmark number. There have been many synergies identified, over 11 cost synergies identified. We have started to realize a number of them across premises, systems, review of contracts. We have people, and we are expecting this to continue and to be realized in the coming years. And we've obviously optimized the investment strategy, and the yields have been increasing since the integration has completed, and we expect this to continue hopefully this year. But generally, this is a high-level update of the integration status. And again, we look forward to reaping the fruits of this important merger that happened last year. Thank you. Back to you, Martin.
Thank you very much, Dr. Dhafir. And as you can see, I think we are rightfully proud of doing the integration and delivering in some of the challenging markets good results. And you heard all the elements by bringing so many entities across so many territories together. That's no easy game. But we have been always focusing on the speed, because we wanted to make sure that we are moving as quick as we can, as Dr. Dhafir highlighted, to ensure that the customers are at the center of what we are doing and that we bring them through the integration and the transition, the best services, but particularly then going forward, that we are embedding new solution and we expand on the benefits which we from the beginning saw by coming together from National Life and RSA. I have one slide and the next slide just to wrap up a bit on a few key highlights, what we are focusing on. And again, it's no surprise because they're very much aligned with what we shared with you before. The focus remains very much on similar things. Now, while you see 4 examples and you will immediately realize they are very much interlinked to each other. But I highlight a few elements just to give you a bit more color, what's our thinking and where we are pushing and where we are already moving ahead. So the regional footprint has always been obviously at the core, and you saw it at the opening, you saw it at the announcements, even when the companies came together. The pan-GCC play is mainly meant there. So we wanted to make sure that for us and with our customers and partners, that we really can service them across the GCC and ultimately most probably even beyond. And that's where we put already in 23 the foundations into place to make sure that we can grow into the full GCC, have the right offerings at the right place, which is very much also interlinked in the product expansion. As you saw and as you might recall, the combination of both entities brings us naturally through the combination already in all the GCC, but we haven't played all products in all the markets. So, for example, we had P&C operations in one country, but not health, or the other way around, we had health and maybe no P&C. And UA is a great example where we bring this together, as Ravi highlighted as well in one of our key markets. But there we look even beyond saying, how can we bring it to the next level? How can we push it? But then partnerships as well as innovation, digitalization will be at the core. But also the regional footprint is, and there are a few elements in there, which linked for me to product expansion. There are mandatory health coming in Bahrain. There are mandatory health obviously in Oman. There are other health opportunities in markets we haven't played or we have been very small. Again, these are the elements which are sitting between the regional footprint, product expansion we are focusing on. The partnerships, and that has always been really part of the DNA, that we want to partner up with strong partners in the individual markets, but also beyond, if we have partners where we can go beyond markets. And that's something which has, as I said, always been the DNA, I would say, in our companies before. But we see a lot of potential by partnering up with like-minded organizations. And you most probably expect that I'm talking mainly about business. And yes, business is important. This can be banks, this can be other providers, this can be also new economy and new technologies. But also, I would say mainly for us is a step to enable, which goes then into the innovation digital offering, enable partnerships also with providers, which, for example, are reshaping the health ecosystem as it exists today in some of the key markets, and see how we can make this available across multiple territories, or work with international players who want to have GCC access to bring their cutting-edge innovating products or offerings, and we can partner up and make sure that the best-in-class products are there. And that's where, going back, where integration was obviously the key theme for 2023, now 24 and beyond is really about innovation. We clearly define ourselves as leaders in most of the markets we are playing, and we want to make sure that we are shaping and differentiating in the market. And that's where we put a lot of emphasis and effort as well to make sure that the innovation and the differentiation and lifting each of the markets through products, through partnership, and the footprint at the end of the day are really linked very much going there. And of course, digital offering, that's the way we're going out. And if I'm talking about digital offering, it's not just the sales process, it goes into servicing and so on. So what you will see very shortly in Oman, for example, for our personal lines customer, new journeys, new ways of registering claims, new ways to interact with us. Again, I'm very proud seeing the team working very hard to bring the next level of digitalization to the market, and similar things we are working in other markets which are there. So these are just a few elements, again, I wanted to highlight. There's obviously much more in the making, and we are working hard on. But just to wrap up, these are the key focuses for 2024. And I think we want to make sure that we have the right people on the call. We also have Adel with us, who is heading the personal lines segments. We have Ahmed with us, who is looking after commercial lines, plus the two country CEOs, Hanna, who is looking after the Oman and Kuwait markets, and Kamran, who is our KSA CEO. And I think with this, I hand back to Reem that you can shoot your questions, and the panel is here basically to answer any questions you might have. Thank you very much.
Thank you, Martin. All right, so as Martin mentioned, we'll open the floor now to any questions that anybody has.
It's always great if a presentation is so crisp and clear that no questions are there. But Bishan, I think there is one question. Yes.
Yes, Bishan, please go ahead.
Hello.
Hello.
Hi, good morning. This is Bishan Bhalla from Vision Capital. Thank you for the presentation and for this forum. Just a couple of queries. We've obviously noted the new sort of reporting format in the form of IFRS 17, where you basically present insurance service results and your net financial results. But if I break it down, on an operating level, the company had made a operating loss of 3 million real last year and a 10 million real loss this year. If you could just elaborate on that, because earlier what used to happen is we would directly be able to look at your combined ratios from the income statement itself, looking at net written premium and expense ratio, loss ratio, etc. Now that, at least in the interim, would be a bit challenging. So the way to derive that is to look at your net profit and X out your investment income. So if you could just comment on the operating performance and sort of what combined ratios you're seeing currently, and how do you see 24 and 25 going forward? Because it's been a different year and a different journey for Liva. I think you guys have done a great job. So just wanted to understand where the company stands, what combined ratios you guys are looking at. Yeah.
Right. So let me take that, Reem. So you're absolutely right. I mean, IFRS 17 is, while it has been implemented across the sector, it is still something that is a work in progress. The underlying KPIs and underlying ratios as to how they need to be derived is something, as I'm sure you're aware, is still being evolved. So to your point on our operating performance, yes, our combined ratio still remains higher than 100%. That is primarily as a result of some of the one-off expenses that we have currently incurred as well. Plus the challenging sort of market conditions that we had primarily on the life and medical segment, which, as you've seen, is our largest segment. Sorry.
Yeah, please go ahead. I can hear you.
Yeah. So yes, the operating ratios and the combined ratios, as I said, still remains over 100%. Primarily as a result of the challenging market conditions that we have witnessed in our life and medical portfolio. However, significantly offset with a very positive contribution by our other product lines, mainly the personal lines and the commercial lines that we have. So that has, given the diversified portfolio we had, the personal lines and commercial line business sort of offset the negative sort of results of the life and medical business. Yes, investment income this year was good, as I reflected in the presentation, and that primarily sort of contributed to the overall positive results.
Okay, noted. Yeah.
Yeah. So from a forward-looking perspective, I think that's something that you asked as well. Obviously, the focus now is to get our insurance operating performance in line with what our planned numbers are, and obviously the idea is to bring that below 100%, and that's something that we are currently focused on and working on.
And okay, thanks for the answer. Now, given the market dynamics, and I understand you're a regional player, not a local player anymore, and I appreciate that. But looking at Omani markets, the way sort of the premiums have been priced, or looking at the operating results across the sector, barring a couple of players, and the segment that you guys basically have the maximum market share in, how do you specifically see Oman's loss ratios shaping up for 24 and beyond?
So Martin, I think Hannah or yourself.
Exactly. Obviously, Hannah is best positioned, I think, to answer. But you're absolutely right. I think 2023 has been challenging on the loss ratio front in multiple parts. Motor being one, which I think mainly the bodily injury impact have been significant in Oman, which newer trends, and Hannah can give us a bit an insight where we are and what we expect. But also even on the medical side, I think from what Ravi highlighted before, 2023 was mainly in the UAE. I think we saw higher frequency and severity. That means the number of incidents per customer were higher, but also the average of the treatments were higher. And we saw this mainly as a bigger challenge in the UAE, but also in a translation to a certain extent in Oman, we saw similar trends. But Hannah, maybe you can give us a bit more insights into the Omani market.
So in terms of 2023, I think the overall market in the insurance sector has seen a significant impact in regards to the bodily injury that have been impacting the motor results. And what we were capable of doing is re-looking at our segmentation and making changes into our segmentation, which have now proven to be quite favorable in terms of our loss ratios, significantly showing a positive return in making changes in those segmentations that we were perhaps at an earlier point attracting. So in terms of the motor business, we're seeing the loss ratios improving. In terms of the medical business as well, as you're aware, the premiums have come down compared to pre-COVID. That has caused some negative sort of impact in the overall portfolio. We have seen some improvement happening in the overall premium. And as the largest insurance player in the medical field, we are trying to basically make that change in the market to correct the market in terms of correcting the pricing and correcting the premiums. I think perhaps maybe Adele on the motor side, if you wanted to give a little bit more insight, being the regional PL.
Absolutely. Just to further build on what Ravi, Martin and Hannah said, we are seeing an improvement in our loss ratios in our motor portfolio, which is the second largest portfolio for us in our Oman business. In 2023, we saw adverse impact come from bodily injury and adverse risk selection. We made significant progress in our risk selection in the back end of 2023, which is improving our attritional loss ratios into 2024, and we see that trend continuing for the rest of the year. In addition to our management of the bodily injury, which was a market-wide phenomena in 2022 and 2023, and we feel through an improvement in our risk selection and other claims management processes we put into place, we're starting to see a massive improvement there. So we expect 2024 to significantly be better than what we saw in 2023 in terms of our loss ratios.
Just on the medical side, I'm sure you're all aware that for Oman, we are still waiting on the mandatory health to come into play. And if that gets approved, then we could see a significant improvement in our medical portfolio, considering that only 11% of the population right now is insured, and that would be increasing about twofolds. So that's a significant positive improvement that we're looking for in the market as well.
Right. Thanks for that answer. So basically, you do see improvement in sort of the loss ratio as well as the overall premiums in the motor and sort of medical segment in Oman. Right. Okay, that's encouraging. Last one from my side, the reporting also has been a bit different now compared to how it was last year. We had a clear idea of what your net claim ratios were across the geographies that you operate in. Could you just give us a brief update on that as to what the net claim ratios or loss ratios are in the 5 geographies that you operate?
So again, given the diversified group, it's not just the geographical, loss ratios. Even the product-wise loss ratios are different as you would expect, given the nature of the business that we are in at the moment. So again, the issue that I have is very similar to what you have. I mean, which ratio do we give you now? Do we give it on based on IFRS 17 because the results are quite different? The results that we now maintain under IFRS 17 against the claims, etc., is much higher given the additional risk adjustments, etc., that we need to do. Or do we continue to operate on the basis of the IFRS 4, which may not be consistent with what the IFRS 17 results are? So given that challenge, at the moment, what we're doing is we're trying to sort of control our business and operate on the basis of IFRS 4. But then, whatever ratio I tell you will be different to, and it will not be comparable to the financial results that we have declared. So with that, one thing I can confirm, as we have already alluded to earlier, the loss ratios of our medical business remains high, as a result of which our overall combined ratio is more than 100%. However, our loss ratios with respect to our personal lines of business, especially in UAE market, have improved very significantly, and these are at a level where we are comfortable with these kind of loss ratios. But then coming back to the personal lines of and motor business in Oman, as a result of the bodily injury point that we mentioned, our loss ratios in our motor book remains significantly higher. And similarly, to give you some sense of the loss ratios in the KSA market, again, our loss ratios with respect to our personal lines of business in KSA remains, within the expected levels, and we've seen, much better loss ratios with respect to our commercial lines of business in UAE and in Oman.
No, I think that makes perfect sense, and I completely understand your sort of limitations as of now. It's a new reporting format. We also are cognizant of that. The idea was to probably work together, where over a period of time, probably you could reflect upon these numbers in a format that's consistent with the reporting standard, as well as give enough flavor to the analyst community. Because at the end of the day, when we analyze a company, I mean the insurance sector, we look at it from the operating side as well as the investment book. So whilst the investment performance is fantastic, continues to do well, it is important to look at what the operating book is doing. And I wouldn't just want to bring it down to one single operating profit or loss number, right? There's so much more behind those numbers. So it just helps to sort of look at trends, especially for a diversified company like yourself, which is a regional player, right? It would be unfair to just bring it down to one operating number. So like you said, point well noted. Motor loss ratios continue to be high in Oman, medical loss ratios continue to be high in Oman. So it's good to sort of look at what trends there are and sort of how premiums are evolving along with sort of the loss ratio. That would actually make it better for the analyst community as well, and in turn, in the long run for the companies. So that was the point I was making. Yeah.
Sure.
All right. That's it from my side. Thank you so much, and wish you all the best.
Thank you very much.
Thank you so much. Thank you, Bishan. I think Joyce has a question. Joyce, go ahead.
Hi, good morning. Thank you for the presentation. Just one question. Could you give us some idea about the roadmap for the mandatory health insurance in Oman? You just said there is only 11% penetration. So what kind of growth are you looking at, and what could be the timing from the regulatory perspective as well as from the business perspective?
Yes. So as we said, this has been obviously in discussion in the country for about 5 years. The last we heard is that the regulator, along with the Ministry of Health and the Ministry of Labour, are now taking a serious call that hopefully sometime this year we should be looking at this policy coming out. Now, what this means for any insurance company that is offering medical insurance is that the opportunity in order for them to basically have a larger sort of base the opportunity would be there. It's a very small base at the moment. I would say everybody's sort of after the same pie, and that increases the eligibility for people to basically be eligible for this mandatory insurance increases. What we are doing at the moment is approaching quite a number of companies that do not have say group medical, for example, for their employees because it's not mandatory, and trying to get them on board because we know that this policy is going to be coming about, and to get them started. This is a great opportunity for every insurance company, for the hospitals as well. And as I said, right now the insurable market in Oman is about 11%. So that would grow from our estimation to about twofolds from where we are today. So the opportunity is quite great in terms of having more people onboarded onto having group medical. And as you know, there are large companies in Oman right now that do not offer that for the Omani population.
Thanks, Hannah. So, and what's your market share in medical insurance in Oman?
So right now we're around the 50% mark.
Okay, good. Thank you very much.
Yeah.
That's it.
Thank you. Okay.
Thank you, Joyce. Do we have any other questions? We'll give everyone a second. All right. I think if we don't have any more questions, we can log off this session. So thank you all. Thanks to everybody that joined. Thank you to all the Liva team that answered all the